Jade Capital Partners midweek report. Hi, my name is Rob Clayton. Well, as the market slowly settles in to a steadier price action since Friday's aggression or whipsaw price action, it now suggests that we are still looking towards 72.5 as an objective. A break of 72.5 still exposes a move towards 70.25 to 69.60, and this is my preferred view. And any advances up towards 74.5 to 74.70 as a cap. Only a break there would expose further upside risk to 75.25 with an objective of 76.40, which was the recent high on Friday. However, with oscillators remaining negative on a daily, and also if we look on the hourly coming through here, does put further threat towards the downside and hold towards that 72.5. The euro has held steady since considering the heavy decline on Friday. However, if we look at a daily view, I still feel that this price action and this current mild rise that we are in at the moment is setting the market up for the next move down. With 110.50 recently broken, I'm looking for a view of 107.70.90 as an objective. Beneath 107.70 holds 104.70. That's my preferred view, where I think where euro is going in the next possibly few days into the next couple of weeks. What will turn this around is seeing a move through 111.60.65. This will give further momentum up towards 112.20, but as I say, like the Aussie, the stochastic is very much in a negative formation, as well as the hourly coming through here to look for a further attempt to the downside. Well, dollar yen story also consolidating at the moment since the low of 98.90. At the moment, I'm still in the view of the market will test lower, and what will get this move is a break of 101.10. This would actually open up towards 140, and it is beneath here that would actually expose 98 figure as an objective. What might happen towards that 98 region is the possibility of seeing the BOJ intervening and could actually send the market straight back up to about 102, 103. As long as we remain under 104, the bearish outlook will remain towards that 98, possibly even lower to 96.5 now, before reassessing of the next trend. Well, moving on to sterling, I still find that the direction is very much down after an 19 figure fall, I believe, from 150 to 131, or even a 31-year low. And if you look on the dailies, which is very hard to tell considering this heavy decline, but I feel that if we look at in a broader view, is that the false break of the trend, the heavy decline, now looks to an objective of 132.40, even though we have had a recent low there of 131.10.15 area, which was the previous night. A break of 132.40 should expose 128. Now beneath 128, I expect to see the Bank of England possibly coming in, as the market will probably fall towards a 124 objective. Any fresh advances should find resistance now at 134.60. However, a break above there would actually see a rise up towards 135 to 137. But as I state, the market isn't bouncing, and the risk, I feel, is still very much to the downside. Moving on to the S&P, well, let's go for the dailies first. As you can see here, the heavy fall got to a low of 1980. A retracement now coming in play now, looks towards resistance capped around about 2040. In the next few hours, I would like to see a break of the trend that you saw on the hourly just a moment ago. Was holding around about 17, now a little bit higher at 24. Currently trading at 2032. If we get a break of 2024, should reopen the downside And with the favoured view that I'm holding since this heavy decline on Friday is that the market could actually probably head towards 19.5. And if you go on to a weekly, you can see that a little bit clearer. If I just bring this down, and then we can just go back to dailies again, and you can see here tops pretty much come through here. So once we broke above there, the trend began. So this pattern here should, as a state, break lower and eventually head towards that objective. It might be a little bit lower, around 1,935, but putting a parameters of 35 to 55 on 1.9 should actually look for the next coming days. Well, the SPY pretty much is not bouncing either, and you can see here that the downside potential still holds towards a break of 49.70. A break there that exposes a further fall to where this level holds at 48.5. Fresh advances should find heavy resistance around 51.70. Well, gold, since it broke through the threshold around 1,300 to 1,316, has maintained in a bullish stance. With the recent pullback, just respecting that level of 1,300, I still feel that the market can actually go higher and re-challenge those highs. But it would have to clear 44 to get to those highs of 60 to 80. But nevertheless, a very strong 4-hour bullish stochastic coming through here. And even if we look at the dailies as well, still holds to a bullish stance. So as long as we remain above 1,300, I still feel that we can go higher. And to wrap up with crude, well, we once again 2 days ago challenged that 45.5 level, and it holds quite well and rejected it. However, we should note that this bounce is probably not likely to hold. With fresh strength towards $49 a barrel, should find renewed supply. And I'm in favour of seeing this level break at 45.5 and look towards $42 a barrel as an objective. With the indicator, no trend does support this view. Well, that's a wrap. Thank you very much for listening, and I hope you enjoy the rest of the week.